Gary's compiled 7 charts of vertical tops. This is a pattern that has shown up in every euphoric market peak. So the 7 that we're looking at are showing up in the market leaders on the ASX right now. So if you've never seen this before, you're about to get a masterclass in them. But here's what most traders miss. The vertical tops don't actually feel like a warning signal. They feel more like an opportunity. And the 7 that we're looking at, they all have massive highs right now, which is the exact brief of this setup. And understanding why that is a problem, well, that becomes the difference between preserving profits and watching profits evaporate or drop away. So we're going to break down all of these 7 charts. We're going to understand why they're actually showing up as a danger signal. And then Gary's also got 5 companies that he's looking to rotate into as the market peak rolls over. So whether you're long now or you're preparing for what comes next in the market, this is the video to watch for the year end into 2025. So Gary, it's a lot on your shoulders. You've got that in this week's report. How are you?
Yeah, no, I'm good. Yeah, I probably could have easily put another 7 in actually. Yeah, I mean, there's a lot of sort of stocks in this sort of what one of my mentors, Bill McLaren, would call a blow off top, which is sort of like when markets get into the lull in getting vertical, and as as a technical pattern, they sort of follow to culminate into that. But I won't jump ahead here. But yeah, we're seeing lots of what McLaren referred to as vertical trends or blow off tops there. So that's a bit concerning there when you're seeing so many breaking down. I mean, just even overnight, Chris, we've had a pretty big move there. We've still got 50% of the S&P 500 trading under the 50-day moving average, even though index is within 0.5% of the high. So there's still an underlying weakness underneath under the sort of call there. So, but yeah, it's quite fascinating actually. Almost as fascinating as the behavior of people buying gold after it's gone up 300%. That's fascinating. But it is, we know that those are the signs that you see at when people get euphoric, sort of whether it's greed or fear of missing out. Human emotions take over and do irrational things. Rather than buy it when it's on its knees, we buy it when it's up 300% and going crazy.
Well, that's a good point that you mentioned there. So there's definitely fear of missing out. We completely get that. But you're talking about buying when it's up high. And we've got a whole set of Friday videos we've done for a long time now about buying at new highs and getting comfortable. So that's momentum trading. I'm looking forward to seeing how you differentiate that momentum trading euphoria into euphoric tops, vertical tops, which Bill McLaren's taught you. Just in the context of what we're looking at, you just said, look, we've only got 7 that we're looking at, but you could have picked another 7 more quite easily. And I've seen a lot of those charts, dead right. In the context of the market that we've got right here, you said it's up near its highs. Is there much to learn from the indices, and is it any different to what we've discussed in the weeks gone by?
No, not too much there. We're still expanded at sort of 150% of that range off the last pullback. And, we have sort of gone up that sort of 6 months, which is a popular sort of timing there. So, yeah, I mean, the seasonal aspect is normally to have a pullback from August to October, but it feels like we've inverted here, which is a risk. So when sometimes cycles can invert and, what normally would be a low can sometimes be a high as well here. So, yeah. So, but yeah, lots of risk here. But I guess if we look under the hood, there, that's probably a lot more interesting there. I mean, NASDAQ's pretty similar as well. That's kind of expanded close to that 1 feet. Yeah. So we're I guess probably if anything, our market's probably a little different. It hasn't sort of had that quite euphoric top there. I think we've only expanded about 1/4 or 1/3 of that previous sort of range there. So, and we've still got a few stocks in our market there, particularly in that metals space there. When we just saw the deal overnight with Trump and Albanese with critical minerals there, but we're still seeing. I know it's BHP, Rio, Fortescue, sort of the big caps. They still look pretty firm. So maybe they can sort of still keep us up here while some of the rotations going on. But we're just seeing a lot of sectors generally sectors for me that are in that vertical top sort of stage here, and which sort of spells a bit of danger, in my opinion.
Well, you've studied this for a very long time. Euphoric tops, you've counted it, you've measured it, you've plotted charts, and in this week's report, you've put in Neuron Pharmaceuticals, NEU being the ticker. And before recording, you said, look, this is really going to lay the foundations for the next 7 that we look at. So this is kind of, is it the playbook that we're sort of going to watch unfold on the other 7? But this is kind of this. How would you describe this as a guide?
Yeah, I mean, it's just this is I guess I could have gone back in history and pulled out some previous sort of vertical trends there, but I noticed that this as I was going through looking at Neuron, I thought, okay, well, there's a vertical trend in place there already, and that's already giving you the classic, sort of setup here. So I mean, what McLaren sort of described as these vertical trends is when you see 3 ascending trend lines on the weekly. And what I mean by ascending is that you sort of got your first sort of base, and then the next sort of stage is built, at a higher angle, and then the third leg is built again on the high leg, just getting obviously multiple touches of those sort of trend lines as well. So once you've sort of got 3 ascending trend lines, then you potentially sort of can be in an accelerating or a blow-off move. So if you do see those 3 trend lines basing there, you can kind of get excited that, maybe this can accelerate here and take off there. It's a bit like the 0, 1, 2, 3. You sort of build a few higher lows, and then you can sort of start to go. And I think Livermore's got the what do you call it? The accumulation cylinder, where you sort of got that sort of building sort of high lows, and then it takes off here. But this is the sort of same principle there. But once we start to sort of see 3, 4, 5 accelerated trend lines, that's sort of getting up there. But when you see that last leg go straight up, they're really aggressive, and sometimes they end up being like at least half of the whole move. That's probably almost the dead ringer in some regards, is that if you build this base over many years and then the last 6 months goes up, 50% or even a bit more, that's the milk draw. So once you actually break that trend line, we know that it's going to come back to where that last acceleration started from. So that's the beauty of these vertical trends here, these blow-off moves here. We don't know when they're going to end sometimes, because they can sort of, we know with Friday momentum, Chris, the momentum can go a little bit further than we all expect. But once they break these trend lines, then we know where they're going to come back to. We show it with Dronesheild there in the last little vertical trend as well, and then it came back pretty deep. And look, we know that with momentum names generally, I mean, I'm not sure who coined it, whether it was Menaveni or not, but the 50-80 rule. So we know 80% of those high momentum leaders are going to come back 50%. And we know 50% of them can come back between 70 and 80% once they've done. So they can have some pretty big declines. So we know that rule just in general, but with these vertical trends here, once you sort of get that, 4th or 5th accelerating trend line, then that's going to come back here. So the minimum move is to come back to the last acceleration point, Chris. And if there's 3 or 4 trend lines there, sometimes we can come back to the third accelerating trend line. So like in the NASDAQ, when the NASDAQ got into the blow-off move in 2000, that all those stocks came back to, I think there might have been 4 or 5 extending trend lines. And not only did it break, got down to the first trend line pretty quickly, had a little bit mini bounce, and then came back to, below the third accelerating trend line. So they can come back a bit deeper there. So the way I view it is that the minimum is to come back to that last acceleration point. And that's usually around that sort of, if you look at it there, when it goes 26 back to, so that is a 50% correction, which sort of falls in line with the momentum studies as well. So that's the sort of, that's where,
like the big extremes that most people play.
That's the template. That's really the template. And I've been asking people for probably 2 decades here, is that when we do get an accelerating trend line, we get 3 accelerating trend lines on the weekly, and then we get a vertical pop. Show me one that hasn't come back to the last acceleration point. And I've never been sent one that and I've gone back and looked at it. I remember CSL in the early days had accelerating trend lines. I know Coca-Cola, McDonald's, and some of those, they had accelerating. So even the best stocks have had big pullbacks here. So the good thing for Neuron here is that it doesn't sort of, and that's had the 50% correction, but then it's actually sort of been building again. So sometimes they don't recover, other times they do here. So for Neuron, which is Neuron has recovered here, which is a good sign. So sometimes when they recover like this, it means they can go back up the old high there. So Neuron potentially can get closer to that old high, maybe $24, $25 potentially. So yeah.
And we're being quite serious. If somebody does have a blow off top that they can share that hasn't come back to this last point of change, please share it. But let's move into these examples, because these are examples that were just like Neuron. They were absolutely screaming. They went up massive amounts, volume support, strong themes, good market backing, etc., etc. So we have that now. We've got Capricorn Metals. You talked about people lining up to buy gold. We know that gold's euphoric. Metals going really well. Critical minerals, take your pick. We've got a lot. And as you said, there's more than 12.
Yeah.
So Capricorn Metals, CMM, I'm counting 8. You've got 8 here. So I want to those raw.
Yeah. I don't think I've actually ever seen that before. That's quite fascinating to me. So look, some of those lines on the bottom there are a little flat, but I couldn't get them. I had to sort of keep accelerating them up to each low there. So that's they were accelerating in nature there. And then it really sort of took off from that after that fourth accelerating trend line. So so we know here once this is done here, we're probably going to come back to that last acceleration point there, which is around that sort of $9 territory. It's really when the last leg is sort of is taken off here. So that's the thing about biblical trends. We know once they're done, they're going to come back to that level there. And to say sometimes they'll come back to the prior start as well there. So thinking around that sort of $6 to sort of $7 level is sort of where they often will come back. But we can't sort of count on that. But we can count on it coming back to $9. That's history says that level gets taken out almost every time. I'm sure there's a chart out there that hasn't. I just haven't seen it, but I'm sure.
We want to.
But yeah, that's what sort of is. So that's the concern there. Is that once you start getting vertical there, and we've got all the hallmarks there. People lining up.
To buy physical gold.
Yeah. And then the mint's running out of silver as well. People trying to buy silver. There's not enough silver to call it. So that's But I mean, it's kind of it's fascinating in some regards because like, why have you waited for it to rally 300-400% to suddenly
go and buy it?
Yeah.
Is it because your neighbor said they bought it? Because the taxi driver said they bought it?
Yeah.
So you've got Evolution Mining, which is still in that same space. So we're sticking with gold, and we're still perplexed as to why buy now. But you've got 5 ascending trend lines. These ones are a little bit easier to see. So we're connecting the lows. There's your first trend line, and then from this low to the next low creates a second trend line, and then from that low, we then have a few touches here, which maintains on the same trajectory, connecting a fair few lows, which is like perfect.
Yeah.
But then it gets faster from this low here that we're highlighting at the start of 2025 through to what we're getting in July, kind of the next low that we saw. It's a steeper trend line, so it creates a fourth one. And then you can just kind of join the dots on the weekly chart, not the daily, the weekly, for the last couple of months. And that kind of conforms with the 5th trend line. So reading your chart and what you just said with CMM, where the 4th and 5th change, that low, where it gets steeper, you're saying that's the first?
That's the first one there. I've never seen one never come back to that first target there. And oftentimes I'll come back to the next accelerating trend line, which in this case is around $5. And that's a perfect, to be honest with the evolution there is probably the textbook vertical trend sort of blow off move, because if you look at where it sort of started at $2, it's got to sort of, so $9-10 and pull back to sort of $7. So from sort of 2 to 7, that's sort of $5. And then we have a $5 rally from 7 to 12. So the last leg is exactly the same as the whole, as half the whole move. Do you know what I mean? So that's 50% of that, sort of 1, 2, 3, 3.5 year sort of setup here. So
50% of the move has happened in the very last.
In the last 6 months. So we spent 3.5 years building this thing, but that's the way, the way it goes. That's why it's sort of, it's quite rightly pointed out all the time there that sometimes if you sell too early, you miss big part of the gains there, because all the big gains come at the end. So so that's again another fascinating insight with technicals as well. So you just got to be careful there with those. So lots of those golds are in. I've been building a base here, I've been accelerating, and then they've gone vertical in, and there's a lot of moves there that have gone 50% here in the last leg. So again, that's sort of classic, blow off top sort of moves on weekly sort of setups here. So, and we're getting all the classic signs as well. When you sort of see euphoric, lots of behavior there. I mean, that's just, you go back and look at textbooks written from 20, 30 years ago about euphoric tops, what's actually happening at those tops, they're happening right now. So, and they'll be writing about what happened in the last week or two here in the next 10, 15 years when they go back and study these tops. That's just the way it works. So
There's some great books. I think it was This Time Is Different from the GFC, and then George Soros's The Alchemy of Finance. And I remember reading them and thinking, hang on a second, you could take George Soros's book, change the dates and plant it in here, and it all still applies. So it just repeats itself. But digressing, we're here for the charts. We're here for the blow-off tops that are repeating themselves. You've seen them many times. If we change gears into a different sector, a different part of the market, high growth, huge performance, Live 360, you've traded it a fair bit and traded it very successfully, but we're looking at it from a different angle here, the blow-off top side of things. I'm going to highlight the first leg, and then it changes gears, goes for the second leg, and then from that low that we had in April this year, we've rallied from $15 to $55. I want to hazard a guess on the maths, Gary, and say it's more than 50% of the move.
Yeah, that's right. So it's so it's probably almost 3/4 of the range. I think it's about 70. So I think it's like 3/4 of that range there. So that's a big percentage move in the last leg here. But again, that's the nature of these sort of accelerating trend lines of building up and then really accelerating at the end here. So bit of a concern here that we've had probably 3 touches of that trend line. So it's actually more valid than a lot of them. And we have sort of broken through here last week here. So just sort of 360's probably been, I would easily say it's probably one of the it's one of the leaders. It's been probably one of the top 5 stocks there, particularly in big cap land. Dronesheild's probably been the other one from a momentum point of view, and there's been a few other sort of growth sort of shares as well that have done pretty well here, but this has definitely been one of the best performing larger caps on the market there, and definite leader in this marketplace as well. Has showed leadership qualities all throughout that. As we sort of said, like when the market was finding a low in October, it was finding a higher low, already showing that strength. The next sort of, I think March 23 and October 23, it was making higher lows as well. So again, it's already sort of showing all those classic sort of signs of relative strength all the way through here. But that last leg here, that's quite phenomenal leg. So there's no doubt in my mind that's not a bit. That's a blow off top, a vertical trap. That scary thing for me is that can that come back that far? It's a fairly big correction, but we do know that the leaders will come back. Tend to sort of come back. You have those sort of 50-80 rule there. So that's probably the one thing that can on there. Probably a natural support is to come back and sit on top of that prior high there. But we'll see whether this one comes back to the third. That seems like a massive drop to 15, but hey, we'll
Seen it before.
We'll look back. We'll look at, say, 6 to 9 months and see where we sit there. It'll probably, I'm guessing mid to late next year is probably going to be the bottom of the next cycle. So we'll see where they're sitting around then.
Well, for those who haven't seen it before, some of the biggest names in the world today, Amazon, I think in Gary's previous reports, found that it fell 96% or something like that after the tech wreck. So it ended up becoming a behemoth, but it did went through a lot of torture and had a fall worse than what we're seeing here on 360 potentially. Now, another one is Dronesheild. You have talked about it before. And this movement here, we're going to put a link in somewhere within the notes below, because Gary talked about this exact setup before when it was happening in Dronesheild. And we talked about it in the last week or so. You kind of know when you're hitting the mark, when you're kind of getting hate mail. talking about this potential, and you were talking about it right here. So it did happen, and it did pull back.
That had the classic base as well, had accelerating trend lines. So got onto the third or fourth accelerating trend line. And then the last leg was really super aggressive. You can sort of see that on that weekly chart there. So once it sort of finishes, it's always going to come back and, retest the last acceleration point there, which it clearly has done. This one's not as obvious there. It's sort of it's kind of had a but you still got three setting trend lines again. And the last one is probably a little shorter here as well. Probably the fourth one, which I haven't sort of highlighted on there, but we've definitely had a pretty impulsive move down here. And we've seen the sector too, Chris, as well, as we sort of know. It's not just on its own. We've seen all those defense names here. So I think we've seen ELS, EOS,
most of them.
ASB here. I mean, I could have showed when ASB is a cracking chart, but I think that had about 5 or 6 ascending trend lines as well. I was keen to show that one because it was really, really good one. But Dronesheild's really been the leader. That's one that's had the biggest moves there. So, but yeah, we're just seeing all the leaders there of this sort of bull market are all starting to break down there. That's the concern to me. So I know we've seen a bit of rotation here from one sector to the other all the way up here, which is quite healthy. But when we start seeing the leaders start to fall here and start to break lower, and then we're seeing heavy selling, and we're starting to see extending, what they call these extending trend lines start to get broken. Those are just not good signs there. So, I mean, even JB Hi-fi here, it's quite it's quite incredible. So I started looking through them. I thought, there's so many of these big caps as well that have actually gone through these, gone through the gears there and built these accelerating trend lines there. So, but the scary thing there is they've actually broken those trend lines, and there's actually been a bit of selling, bit of volume there as well. So we're not sort of breaking them on light volume there. We're actually breaking through with a bit of a bit of conviction on the sell side there. So we are seeing signs of distribution as well. So that's going to be a bit of a concern here.
So that's definitely, I'll just quickly mark it up for those who are learning. We've got the lows, we're connecting the low here, and it still conforms with the next low. But that becomes an inflection point if we're drawing the low in October 2023, with the next low being early 2024, April. And then we can't extend that line any further because the share price accelerates further. So we connect the April 2024 low with the next one, which is April 2025. Yeah. And then same thing, we can't extend that because we're getting no more touches on that trend line. We have to increase it to the next leg, which has gone vertical, to where we have a couple of touches in the last few months. And then, as you described, quickly or recently rolling over.
Yeah. So history says we come back to $85 at least there as a minimum. So these all sound sort of like scary moves there, but you go back and study those vertical trends of the past there, you just don't see it. You don't see them not. So I just don't see them not come back to there. So it is a bit concerning when sort of seeing so many of the leaders there all breaking, together. So yeah,
same time, vertical movement, big long bases, big gains, consistent gains. And Eagers Automotive, we know the story from electric vehicles, and they've had BYD and the dealerships in Australia, so they've done exceptionally well. But this move is much shorter in the time frame side of things, because in some of the other charts, you're showing us multi-years, whereas most of this has really happened in 2025. So you haven't quite...
Pretty amazing. We got a pretty good large cap up 360%. That's pretty impressive in a short period of time. It's amazing move there. I didn't mark the lines there just because you can sort of see that it did accelerate. Yeah, it's in that, you can clearly mark out at least 3 or 4 extending trend lines. You can probably mark out 4 or 5 there. But it's you can sort of see how that is accelerating. That that's getting in a vertical trend as well. And then you look at that distribution the last couple of weeks there. So seeing some heavy selling there coming in at the top, and then in the first week down here. So yeah, it should be a bit of a concern there. So yeah, I haven't really got a guide on that one now. I mean, the last little swing low is probably around $24 there or something there, but feels like this one can probably come back to at least it'll sit on top of that old high around $19 there. But again, I think if we just use a 50-80 rule there, 36 maybe down to 18, probably, you know, $18, $19 probably makes the most amount of sense there, just based on the rules of these momentum sort of stocks. And you know, there's clearly been a momentum play here for the last 18
Well,
months.
yeah, definitely this calendar year, it's ramped it up. So we move into the part of the report where you talk about, you've mentioned rotation a few times, and we've got to go somewhere else. This capital wants to be deployed somewhere else. Yes, it can go to term deposits, gold can be taken out of the market, but we still do see rotations. That's something you've studied a lot of. So
Yes.
Ramsey Healthcare's in this report. We're going from the top performers to the bottom performers. What is it that sort of highlights this to you? And I guess we probably should start from the industry sector sort of point of view and rotations.
Yeah, look, if I'm wrong about the market there, you're still going to receive rotation as we've seen all the way through here. We're seeing, you know, the sectors that have got a bit vertical extended, they've rotated into other areas there as well. So, I mean, to me, the, you know, gold, you know, as I said in my report there, you know, I think, you know, if I was long any physical gold or any gold stocks right now, I'd be selling them all. You know, history will show that this, you know, I think the next 6 to 18 months there, you'll see a fairly large decline there based on the history of those sort of vertical type moves. I know there's a, you know, suggestion of the inflation play there, but even if you go back and look at that sort of 70s performance there, and I showed it there a while ago that, you know, precious metals and energy were, you know, the top performing sectors in that high inflation environment. They still had some pretty decent down years in between. So I might have 2 big years and then down big year, and then maybe another up year as well. And we've seen that with energy as well. Energy's had some big moves and some big declines, and then, you know, so just look at uranium's had a few big runs and a few big falls and a few big runs again. So so you got to sort of see that at least there. But I think definitely seeing some of these healthcare names, some of the staples, and yeah, just some of the defenses there, so sort of starting to sort of stand up here while the growth's starting to get hit. So starting to see a little bit of relative strength there, sort of showing here as some of the sectors starting to sort of roll off here. So these are sectors I'm sort of watching pretty closely there. Just again, we don't want to just jump in and buy these things. We want to sort of see some sort of strength from those. So, like, you know, if we are sort of getting a little bit of a tightening pattern there, I want to be breaking through the upside there. And then, yeah, sort of following that move there. Because, you know, we potentially they can still sort of come back a little bit lower here. I do like the fact that we potentially got a false break here, retest of the low. Seen a lot of false breaks in the last few years as well, work out from a trading point of view. So, but yeah, I think once we see that first little swing high broken there, we'll add into some sort of strength there.
And CSL, still in the healthcare space, has taken an absolute bath, but rallied quite recently. That rally is only making up, well, a portion of that recent drop. And then you can take the lens out even further on the weekly to put it into more context. You've got a potential pullback here. So would you want to sort of see it give up some of that recent range, find some base, maybe halfway or 2/3?
Yeah. I was hoping it might have come back, not run as far and come back. Yeah, I saw the first couple of days down in that early October there, and then I saw the volume dry up, so there's just no selling coming in. So I thought, okay, it's the first time that the selling's dried up, and then the stocks jumped again. So it'd be nice to sort of see this pullback. I just noticed oftentimes when we see the first leg up like this, we'll normally get sort of some sort of little congestion pullback there, but it might only come back to around half the range before it comes in there. So this is one that I'm probably a little bit more keener on. And yeah, so I'm just trying to, I'll try and add to on weakness there if it comes sort of back here. So just add a little piece at a time there rather than all at once. So.
Well, another one in the list, still in that healthcare space, and we completely understand rotating through the sectors, changing the gears, the markets do that. Sonic Healthcare still down near the lows, but what is it from a technical perspective on this weekly chart that makes this one to stand out to you and get your ears pricked up and pay attention?
Yeah, there's a few levels of stuff I'm keeping an eye on there, but look, the stock sort of, like the market was looking for about 13% growth and it only came in at 9%. So as a result of that, miss. Instead of getting 13, it only got 9. The stock's down almost sort of $8. So that's about 40%, Chris, on a 4% miss. So it maybe seems a little bit overdone here to me. So, but we know the sectors, so we're just looking for sort of signs there that we're going to see a bit of a base there. So we've definitely come back to a pretty low multiple there. The yields basically, up around, about 5.5% here as well. So there's actually a bit of yield in. I sort of, if we are starting to see a little bit of an uptick in inflation again. So, yield might, if we do see some, continuation in, a few heavy inflation numbers, then you'll probably move back to value again, back to sort of, yield become more important. So yeah, just watching this one here. So it looks, still need a bit more proof there, but just starting to see some early signs there that, that we might be sort of kind of nearing a low there. But so I'm just looking for maybe the whole thing to tighten up a little bit, just give me sort of a safer entry. Don't be sort of buying these sort of deep lows there. Just want to see some sort of positive price action first before I jump in there.
Well, if we look at we dust off the textbooks from years ago when we last saw a recession of some sort, which we joked no one under the age of 30 has ever seen. In the Woolworths.
It's funny that, isn't it?
So Woolworths is one that we typically would have looked at the textbooks and said, okay, we're going to rotate out of the growth companies. Yes, we might have some speed into the inflationary impacted assets, the commodities and the like, depending on which side of the cycle we're in. But we can find defensives like Woolworths that'll pay us a dividend. Everyone still goes to the supermarket, etc., etc. That hasn't quite played out for 30 years, but bear with us if you're under 30 years old. You might not know what we're talking about. What is it about Woolworths that's caught your attention?
Yeah, again, so, typically those defensives, the healthcare sort of staples and stuff like that, and utilities, they're the sectors that usually are sort of finding a low or starting to base there while when growth starts to come off. That's really the shift, sell growth, potentially sell gold here as well, and move it some sort of defensive shares. There's a bit of yield in some of these companies now, and their valuations are come off quite a bit. The thing interesting about Woolworths there is that sort of pullback, that range from 14 back to 16 there, it actually expanded the 150, and that's pretty much where the market is right now. So the S&P 500 and the Dow and the NASDAQ have expanded that 50% of that range to the top there. So oftentimes when you do pull back to that 150 level, it can come back to the 50. Like sometimes I've seen here, like if we expand a third, sometimes we'll come back to the 2/3 level. So that 50% expansion there, we've now sort of come back 50% into that range, is around $26. So that's kind of that's the obvious target for that sort of contraction to find some support here. And the other thing we often see is like we're talking about with those blow-off trends, is the last leg down is often 50% of the entire range. So if I measure that last leg down there, that just gets me slightly lower here. So in this sort of $25 to $26, that's kind of my target zone there for the stock, and where it sort of should find some support there. So there's some technical, and we're sort of starting to see a little bit of support come in there last week. So maybe it won't come down to that 50% level, but we are around that sort of zone there. We probably should look there. So I think if it pulls back sort of under 26 there, I'll probably start to accumulate some there, and I'll just tee my levels a bit lower there. So just means hopefully I'll get some. If it comes all the way back down to that 50% level, then I'll get it all. So but yeah, just trying to pick these up at some reasonable sort of technical levels. So kind of buying against momentum, some of these names there, and a couple others. This Ramsey just hasn't been been a bit of a laggard in that space there. I really don't want to be buying that into weakness. I want to be buying that into strength there. I just want to see some more proof there. And probably a Sonic too. I just want to sort of see a bit more proof there. But I think the CSL's already shown that good bounce off the low here. Woolworths a classic staple here. So that's
the other staple. There's one more staple I want to ask you about, which one analyst put to me very early in my career in a eye-opening insight when Lions used to be back on, and Foster's said it's okay in a recession you go buy the alcoholic beverages because people drink their sorrows away, which are shocking but sad and true.
Yeah.
So if we're going to drink our sorrows away in a recession, then it could be beneficial for the likes of Treasury Wine, and you've put that in here. They've dropped off. I think it was what they performed well into domestically, but didn't perform well internationally, or vice versa, something like that, with their announcement, and that shocked it where they dropped down, and on big volume. After this protracted downtrend, how do you interpret that movement, which is sort of like an island or a evening star, or can't remember what it was. Looking at
Yeah, something like that. I think it was kind of one of those things there, Chris, as well. Like, I mean, look, I know we're seeing some social trends there where obviously young people aren't drinking as much as
older generations.
prior generations there. So, so that's cultural shift. But I think it's also, when you have 82 or 83 consecutive quarterly increases in tax and excises, that probably has a bearing as well on these things, So hence why we're probably having the $5 coffee instead of the $15 beer, So, but it's the wine market's a little different. I think it's probably more a mature market rather than a young person's market as well. And I think so I think it's and I guess it's from a stocking point of view as well. You don't the wine will probably increase in value rather than lose value. It doesn't sort of move. It's not why you're discounting wine to sort of move it all the time there. But it's like the reality is here that it's come up quite a bit here. It's come up pretty hard there. But it's been trading now for quite a while, and then that had the sort of bad news come in, and the stock sort of gapped down. So it was almost like it's like banks are going to report well, and they run up into the report, and they report well, and that's the top. That's buy the rumor, sell the fact, and then it goes down after it's had the great year. So this is at a pretty nasty fall. The bad news comes out, and then so there's a few tariff issues there. There's obviously they've changed distributors there, so a few disruptions in the business there. But that's sort of caused the fall here. So now all the sort of bad news is sort of out there. But the stock's trading on about 9.5 times there. So the stock's been trading at around about 18 to 20 times there for the last 3 years. And the prior sort of 7 was trading closer to 20 or plus 20 times there as well. So it's trading about half of its normal PE. So even if you sort of give it a little bit of a haircut on earnings there, it's still incredibly cheap. It just kind of reminds me of that sort of John Lean, how it got really beaten up to the point where it was, might have been trading at half of its yearly revenue or something like, So, so there's a bit of value here in Treasury Wine there, just the sentiment's coming there. So I think this is pretty interesting here to me. So, I think once I think once there's sort of tariffs sort of, gets sort of wound up here, and then, and also sort of, that distributor sort of stuff out there, it could be a bit of upside in the stock here. And I think pricing in too much doom and gloom here. So, but good, it just might be a bit of a slow recovery out of here, but just seeing all the classic signs there. So, I think this is really got 30 to 50% upside here, just from a valuation point of view.
Well, that's a solid one to rotate into if we're moving out of those vertical tops, blow-off tops, and euphoric peaks that you've studied at the start. If anyone wants more detail on all of those sort of setups and the momentum leaders, we've got a video that Gary did on Friday of the best companies on the market right now. And we say thank you, Gary Glover from Novus Capital.
Thanks, Chris.